Please subscribe, like, and hit that notification bell. Thanks, guys. All right, am I recording? Okay, guys. All right. So, what about these silver junior miners? The whale. I call this the whale. So let's just look at this chart, guys. Can I put this bigger screen? Yeah. So what we have here is, and I did a contrast. So I did it black background, white, just to show the base. So this base, yeah, I pushed down the scale just to make it tighter to show. But here you have also the volume defined profiling, which helps visualize what you're dealing with. So for 10 years, this has been going sideways, down, up, testing. So now this, you're starting to create, morphing that launch pad into existence. It goes down, higher low, right? Higher low. Even March Madness created a higher low. Then goes all the way back up, tests, tries. Here even did a gap up, but closed a month below that launch pad. So now that launch pad, and right here, there's a candle right here where it refused to go up. So we got very jittery, very enthused back in 2020. So that thing tried, but it wasn't quite ready to do it. So even if we know that silver went above its 2016 highs, gold went above its 2016 highs, gold went above its all-time highs, its 2011, 12 highs. Silver junior miners halted here. So what this is creating, instead of it going above and then going back down or maybe dipping back below, it's contained all the price action in this clean range. We are below it, so this is resistance, right? It's a wall. But once you close above, that's when it starts getting fun, because this is a lot of transactions, guys. It's a huge volume defined base. 10 years. Gold had an 8-year base or 6-year silver, and you've seen what happens once you breach above it. It's a beach ball underwater. You push it down, and once you let go, whoo, that thing could fly out. I could have drawn here more wake up lines, the lines I draw from the shorter term patterns to try to catch it, catch the move, for it to go test that breakout line. But I didn't want to clutter this chart. I just want to show you the opportunity brewing, morphing into existence. Will it break out tomorrow, in 1 month, 2 months, 5 months, 6 months, whenever it is? It's going to probably take multiple months for that just to get back to, and I'm going to show you a daily chart to give you some more granularity on the smart time frames. But this is how you spot the remaining low risk, high reward opportunities out there, because a 10-year base, there's not that many left, guys. US equities, it's mostly 10-year tops or topping pattern that they did. They're breaking down. There's not many instruments. In commodities, most of them have broken out. They are out of their 10-year base. They're pulling back above their breakout line. So here is why I think lies in the opportunity for silver junior miners still. All right, let me zoom in on the daily chart. So I did this morning. And here's the daily chart. So this is the region where we couldn't get back above $15, $16. This is the target, just to get back those candles. How many candles do we need to get back to that breakout line? Well, this is the daily chart, which has to play out for us to have a chance to get back to that launch pad. And this is the beauty of the arcs. Arcs, as the energy goes down, you start basing. If that base is solid and then you do multiple bounces, here's the middle, probably the middle, because until I get a second bounce on the right hemisphere, I don't know the geometry if it's correct, right? I have here touch, the center, there's the first touch on the right hemisphere. So to confirm that angle of ascent of that arc, I need a second bounce, a real bounce. And usually you quite don't know where it is, then you could stretch the arc. But when I see that the cloud is thinning and I'm starting to, there's room for that moving average to start turning up before it crashes too far out of the arc, this gives me some insight that this arc could be the trajectory, a good trajectory that to bring the price upwards. Can it fail? Can I stretch a little bit more? Maybe. But right now, I'm waiting for that second bounce, see how the price action reacts within that red cloud, Ichimoku cloud, which is resistance. I want to see how it reacts on this early breakout line here. 1, 2, And we'll see if there's a third bounce here, and maybe it's going to touch this early breakout line, come back down here. And after that, I have my final breakout line, which is a wall, previous support, turn resistance, support, breaks down, can't stay above too much, now becomes resistance, comes back above here, resistance. So there's these two here, and the final exit out of the cloud. Those three milestones might come in rapid succession or events. So as soon as the price action decides to bounce off the arc, it's not going to take a lot of days for it to close above the early breakout line, close above the final breakout line, close outside of the Ichimoku cloud. Once that energy, the market proves to us that will enact this reverse symmetry move. So all the base, if the market decides to close above all these in a rapid fashion close to the after second bounce of the arc, we've seen these plays over and over. You could expect the angle of descent into the base to be the same angle of exit out of the base. 66 degree out. Here I see there's probably another going to be at $12, going to be some resistance here, a wall, previous support, turn resistance. I'm dragging my cursor across. So if you know the angle of ascent and you know that the arc target is the neckline of the arc, and you know that is also right below the launch pad, so there's no monthly defined resistance too much in your way until you reach that 1543, 1550 area, 15. It gives you time to reach that target, right? And I know the distance from the apex of the arc to the inner bounce. I often see that it matches, it creates a target area zone. So that's, look, 27 days, guys. So once we close above the final breakout line, this is when this roadmap enacts. And then we count down the days, see how this goes. Probably going to stall here, come back, touch the arc. And if it goes up as fast as it went down, it could be just 30 days after it breaks out to go test that launch pad. Will it break out above that final launch pad that I showed you on the monthly chart? Maybe, but this is the roadmap to bring us to that area. And I'll close up the show. There's another important part, another piece of evidence that's important is the gold to SPX ratio, because we know the gold to SPX ratio, and it's this black line here, guys. Silver chart, the silver metal chart tracks that chart. The silver miners, the gold miners, platinum, uranium, they track the capital flows as defined by the gold divided by SPX ratio. Sometimes I read, well, look, Patrick, there's a disconnect between gold miners and the gold price, or there's a disconnect between silver and the gold price. There's no disconnect, because the macro structure, the behavior for those instruments that you're telling me there's a disconnect, it doesn't track that instrument, gold. It tracks the gold stealing capital flows from the SPX as defined by the gold to SPX ratio. So step one is gold outperforming the SPX. Even if it's on the way down, it's still positive. So let's say gold is going down and SPX is going down, but this ratio is going up. And that ratio, I said the black line. Sorry, guys, the black line is gold, the candlesticks. And this is the 1 hour chart, guys, super fast. If the candle chart is going up, it could be that gold's going down, just like we saw here there. Gold was going sideways, and this was rocking it up. That because SPX was going down. So that ratio going up doesn't mean gold's going down, but it is positive that it's not going down as fast as the SPX. It's outperforming the SPX. So that's step one, guys. Don't get greedy and look for gold to outperform SPX going upwards. Step one, just gold has to lose less than SPX. Once that happens, that sets up the stage for gold to actually go up with this ratio. Just like it happened here, gold went up with this ratio. So now gold on its own chart, own price action is going up, and it's outperforming SPX. That's a double win. That's what you want. And you just want to see that build over and over. And look, this is just TA you do on smaller time frames. There's weekly defined, monthly defined resistance that we can't see here on this 1 hour chart, right? And I know the breakout level, I'm pretty sure it's like at .51, the ratio of gold to SPX for gold to breakout. So we're still far away. We were at .41 here, climbing up .41. Now we're at .42. So I'm just tracking this just to see if that's the move that's going to bring me all the way to .51, where gold will be breaking out or that is the level that gold needs to breach to have a confirmed breakout versus SPX. Then all the other charts we showed you, all the SILJ chart, silver junior minor charts, and all those other charts, then they have the wins in their back. Then you buy the dips. Then you'll see that instead of having 8 days down and 2 days up, you'll have 8 days up and 2 days down. And the script will be flipped. But this is just the building blocks, guys. We got to see if this turns back down and crashes and it has to reset and build a bigger base to continue to move upwards. That's what it's going to be. So you got to put all this weight of evidence. These are just two charts, gold right here, SPX, gold divided by SPX, and the SILJ chart. But there's so much more stuff like we cover at northstarbadcharts.com. But for now, guys, just follow this, and until gold breaks out versus SPX, there's no rush, guys. No rush. All right. Thanks for watching. Please subscribe, like, and hit that notification bell. Thanks, guys.